Well, Pretoria Portland Cement was established in 1892 and has 8 cement manufacturing facilities and 3 milling depots in South Africa, Botswana and Zimbabwe. It has a market cap of 20 billion rand, a price to earnings ratio of 20.4 and a dividend yield of 4.4%. And a choppy share price, but having seen a little bit of a pullback of late. Paul, talk us through what's happening.
Very interesting business. As you said, they're established more than 100 years ago by Solly Marx. He got the cement concession from Paul Kruger, established the Pretoria Works just north of the zoo there. And that was because there was a limestone deposit. Because remember, cement is calcium carbonate, which you put into a kiln, which you sort of fire up, turns into clinker, you mill it, it becomes cement. So it's a critical ingredient in all industrial economies. The stock has done well or not well in long cycles because it obviously corresponds with the demand for the product from the kinds of people that Ian was alluding to. Prior to this 5-year period you're looking at there, did very well, did spectacularly well from 2003 to 2008 when it came out of the Barlow's group and was separately listed. Got a lot of people very excited, World Cup, build, all of that stuff. But since then, it's done not well. Not badly, not as badly as some of the construction companies, but it's got good margins, but it has definitely not prospered in the last 5 years.
And it's the competitive landscape that Paul refers to as well.
Very, very. But remember, to get over that competitive landscape at one stage, and this was quite some time ago, there was an agreement between the manufacturers that one would have this area and one would have another area. One of the earlier industrial cartels that was discovered and broken up at considerable extent. And I think what that allowed in was a number of the smaller suppliers, the BEE ones with BEE good credentials, and to give them a chance. I think they have lost some of their market share, and I think it's going to be more difficult for them in the future.
Where can PPC potentially go? I remember when this one was unbundled.
Yes, from Barlow World, yeah.
Exactly. I don't think it's actually done much from those levels. Am I correct?
Well, it was doing well at that time, as I said earlier, because that was when there was a lot of excitement. But remember, the big cement deposits or the manufacturing plants are where the limestone deposits are, which are out towards the Botswana border, in that Ellisras, Lepalale area. Then there's another whole lot down the sort of Lydenburg and Mpumalanga area, and a big deposit in the Cape. So PPC has a 50% market share, big and dominant position in Gauteng and in the Western Cape. The other players are Lafarge, which is part of a global multinational, and AfriSam, which used to be Anglo Alpha, but is now an empowerment-owned contained firm. As Ian says, they had a big fight, they had a cartel, they've been accused of all sorts of bad behavior. But PPC is the largest player in the market, and it has the dominant position and has been able to lead with regard to pricing. New CEO now leading an Africa expansion strategy.
Is the Africa expansion strategy going to yield results?
In time, yes, undoubtedly so, provided we're going to see this sort of South Africa, the gateway to Africa. I'm quite sure it is going to, and for a number of reasons, not just because we've got the product, but we've got the ability to manage contracts in Africa in sometimes hostile environments, and I think that we've had that experience, and that's going to open huge opportunities at better margins, operating margins, than we've had in South Africa, because it's not quite as competitive.
What is the downside to investing in current levels or at current levels?
Well, look, I think your realization here has to be that it's linked to the building cycle. And, it's not as bad as the construction companies, because remember, construction companies' margins vary from 7% to -7%, depending on how it's going out there. PPC has got a much better profit profile and has always been a solid dividend payer, so it doesn't kind of fall out of business like those construction guys do. But at the same time, because the cycles are long, the investment market forgets, so people kind of fall out of love with it and then fall in love with it again. It's been drifting at around this 30 Rand a share level. It's been paying solid dividends. But you know what? I mean, I like the new CEO, Ketso Gordon, is an old friend of mine. He's a very funny guy. He's had lots of political experience. He was also at RMB in the private equity environment. Very solid guy. I think he's going to do well. So I'd like to be buying the business now. The trouble is I don't know when the recovery in the building cycle is coming. If you knew that,
do you have any clarity on the recovery in the building cycle, Ian?
Is there
crystal
any
ball
clarity?
stuff again?
I don't think so. But just to add to what Paul was saying, I think in the short term it does look as though it's in a bit of a range. You mentioned 30 Rand, and 30 Rand to 36 Rand is a nice trading range. So perhaps one for now is one for trading and not necessary for investing in.
Hot or not, Paul, on PPC?
Look, it was a client-owned stock for a long time. We got tired of it and started selling them in the last sort of 3 or 4 years.
Because it went nowhere.
Yeah, but I mean, it was one we supported for a long time. We made a lot of money for clients on it in the rise up. I think it's going to be time to own them again sooner or later. I like the team, so I'm prepared to give it the sort of cautious hot.
There's no cautious hot.
Hot?
So.
The strong
Hot
hot.
or not?
I'll go with that as well. Short term, definitely.
Hot.